Anna Han, Wells Fargo Securities Equity Strategist, joins us now. So Anna, I feel like we laid out like a bunch of different reasons for why we're seeing a sell-off today. What are you thinking?
Well, I think the market is really trying to digest a lot of different variables at the same time. And you're getting a bit of that knee-jerk reaction. Like you said, there's some concerns about how long can the vaccine, last you? Can herd immunity be reached? Are we going to be able to travel as soon as we thought? All these expectations that had been built in, well, you get a news headline and you're seeing people kind of falter and shake. But big picture, keep in mind, GDP growth is expected above 6% this year. That's a hefty number, and that's going to help equities, I think, generally move higher.
But isn't that priced in, Anna? I look at Pfizer today, and they posted great numbers, and they've raised their forecasts, and the stock is trading down. There's a lot of good news already priced in.
You bring up a great point, Guy, is that, when you look through 1Q21 earnings season, what you've seen so far is a sell the news kind of phenomena going on. And we saw that in 4Q earnings as well from last year. It seems like expectations are up there. But at the same time, it's good news helping push up those expectations. And to see that EPS estimates on the S&P 500 and down the capital structure on the S&P 600, both are in their double digits in year-to-date revisions for this year. So while you're seeing a bit of that immediate knee-jerk sell the news reaction, I think broadly speaking, you're still seeing a sequentially improving story. And there's more good news to be priced in, but it depends where in the market you're getting it.
Yeah, so where?
For us, it's the cyclicals, Alex. When you think about what could happen with GDP growth coming to town, and then on top of that, tack on $4 trillion spending. Granted, we don't know exactly when it's going to hit the market, but that's going to help push GDP growth by our estimates, maybe a half percentage point, maybe even a full percentage point over the next couple years. We think that combined with real yields, which are currently negative and have a lot of upward room to go, is going to help areas like financials, banks specifically, and the industrial sectors.
We're all trying to figure out as well, talking of those rates going higher, when the Fed is going to taper. We've started to get some hints over the last few days. Certainly Friday, one was delivered, that maybe that taper is a little closer than we thought it was. When do you think it is? How do you get ready for it?
For us, our projections look maybe they start talking about tapering at the end of this year. When you look at when and try to time this, the best framework we can put it in is what happened after the financial crisis in '08. And you look at when Bernanke came out and started talking about tapering, or even hinting, and the market became fearful of that taper tantrum we had. You look at kind of where employment had recovered to, where GDP growth had recovered to, and you translate that to where we are today versus a year ago. We're not quite there yet. So we think maybe tapering talks become something they introduce at the end of this year if everything, goes relatively smoothly. But, the question becomes, what if the market moves before the Fed? And that's a risk we need to keep in mind.
So, Anna, I'm trying to get a sense as to sort of what is leading the market. It used to be reopening versus non-reopening. So like a Zoom versus an American Airlines, for example. Then it became more idiosyncratic in terms of earnings. Then we had the commodity move. Like, what's the overarching narrative that everyone's talking about right now?
I think right now the focus is going to be on mid-cycle plays. That early cycle plays, you saw that play out for the last 12 months or so, and they had a nice hot run. Right now, the focus for us is where we see real yields rising. We think that's going to impact kind of, the services industry, the things that we can, once you're vaccinated, what can you do? So it's a little less of, what's precisely COVID sensitive or COVID beta, like we like to talk about, and what is more going to benefit from this reopening, but at the same time hasn't necessarily had that hot run that you've seen in the 12 months. So it's a little different breed of cyclicality.